Hello, everyone. Welcome back to Kudlow. I'm Larry Kudlow. Great to be with you. Now, here's a question a lot of people are asking these days. If the economy is booming, why do we need all these new government spending plans? In President Biden's first 100 days, the Democrats got a 51-vote reconciliation victory for $1.9 trillion. Some of that did, in fact, show up in the March consumer spending numbers. That's right. But now they want $2.3 trillion so-called jobs plan and a $1.8 trillion family plan. So we'll just call that another $4 trillion and change. Mr. Biden continues to tell everyone that when he came into office, he inherited a house on fire. That's the reason many folks are scratching their heads. They don't get it because the economy has been in a V-shaped recovery since last summer. For just about the past year, Joe Livornia, who's been coming on the show, he'll be here later in the show, Joe Livornia and I kept arguing, we're in the government, that the pandemic-crippled economic crash in the first half of 2020 was coming to an end. So sure enough, look at this. Real GDP jumped an extraordinary 33.4% in last year's third quarter. Then it jumped another 4.3% in the fourth quarter. And now, reported out this week, 6.4% growth for the first quarter. Now, for those who may be interested, that is not a house on fire. Those are big, booming numbers, and it's not over yet. Despite occasional spikes in COVID cases and fatalities, actually, those problems have been trending downward for a long time. The economy has been reopening for many months. And with President Trump's Operation Warp Speed vaccination miracle, even blue state governors in New York and California are reopening businesses and restaurants and sports games and movies and so forth, further increasing the economic growth outlook. Now, today we got a 3.6 report, big jump in real consumer spending, and an enormous 21% gain in personal income. Now, on the income number, no question the January stimulus checks hit in March. It's a temporary surge, but it had an impact. Meanwhile, most of the income gain apparently has been saved as the personal savings account jumped nearly $300 billion in March, and the savings rate hit an incredible 27.6%. I mean, that's pretty awesome. Now, I will add to this report, it was a good report, as a cautionary word, the personal consumer price deflator, that's what the Fed uses, is now at 4.3% over the past 3 months. Now, I'm not jumping the gun on inflation just yet, but just saying, these are the facts. Additionally, today, the Chicago PMI report, the manufacturing index, it jumped again. It's up 6 percentage points since March and 13 percentage points since February. Across the board, production, new orders, backlogs, employment, all surging. With vaccines proliferating and people going outside mask-free and dining in or outside, consumers are getting more and more optimistic. They're almost happy campers again, which is a very American thing. Feelings matter. The Michigan Consumer Sentiment Index for April was revised up again, and the workforce is also making a buck with wages and salaries gaining 2.7% in the first quarter over a year ago. It's not a bad number. So, again, did someone say house on fire? Well, I don't see it. All these reports are before the next $4 trillion in spending, and then a $4 trillion tax hike, which you know I believe is sheer lunacy. So is knocking out fossil fuel energy. Raising taxes 2 and 3 times on businesses, death taxes, by the way, the Obamacare investment tax of 3.8% may well be added to the income tax. We're just learning about this. That could mean a 43.4% top tax rate from the original 37, and that would equal the cap gains tax. So I've said this before, I'll say it again. This is economics, supply-side economics, but it's price theory economics, it's market economics. Assaulting investment and capital formation is the same as waging war on blue-collar middle-class families and their wages and their incomes. Mr. Biden may call it class warfare and say wealthy people and companies don't pay their fair share, which they do, by the way. But the real story here is couched in left-wing rhetoric, obscures the fact that a healthy business requires additional capital investment, from folks with wealth or families or friends. And they want a good after-tax return for their risk. So lower business taxes, such as the Trump years, raised wages, slashed unemployment, and attracted massive capital and new business formation. Higher taxes, though, on wages and capital from Team Biden, it's going to cost us jobs. It's going to shrink wages. That is the big problem here. I mean, people on the left who think redistribution is going to lead to a more equitable society that produces growth will find that they get neither, okay? In periods of stagnation, which is the risk here, inequality widens, growth never materializes. That is the folly of the Biden plan. We've seen this movie before. And if you couple that with massive social spending, which eliminates employment incentives, and you've got yourself a problem. Now, my view, amongst all the happy talk from the Biden group, if they get their policy program codified into legislation, they will be constructing huge roadblocks and barriers to the future prosperity era we should be looking at. If it ain't broke, don't fix it, kids. If you keep low taxes and minimal regulations and energy independence, this boom will last 5, 6 years or more. It has happened before. I want to be optimistic, but gee whiz, I want to hold your breath. I want to hold my breath. I want all of you to look at this very carefully because I'm going to say it again. There is no need for all of this government intervention and government expansion. If it ain't broke, don't fix it. That is my worry.